SoFi Technologies is one of the more interesting fintech stocks in the market today. The company aims to do everything you can need financially throughout your life, and that allows it to offer a wide assortment of products and services to its customers. But what's been going on lately with SoFi stock? Let's take a look inside the company, according to its second quarter performance, on what the CEO had to say about that and its prospects going forward. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its second quarter, the CEO said that adjusted net revenue reached a record 597 million, which was up 22% year over year. As I mentioned earlier, SoFi aims to offer a broad assortment of products for people's financial needs, and the company does it in an innovative fashion by not having a physical presence. It does so mainly through its online website and app, and that way saving costs that it would otherwise have to spend on maintaining and building a brick and mortar business. Instead, it spends that money on developing the website, developing new products, offering better incentives to customers. And so far, it seems that strategy has been working. As we'll see throughout this video, the company's progress across a myriad of categories is coming along quite well. The company's combined financial services and tech platform revenue grew 46% year over year and now makes up 45% of total adjusted net revenue, up from 38% 1 year ago. SoFi Technologies is trying to develop a more diversified business and not depend so much on lending revenue. Also, lending revenue, if it becomes more of a bank rather than a fintech services business, the valuation of the stock would be much lower. Banks are not valued as highly as fintech services companies are, and so SoFi Technologies is diversifying away from lending revenue, partly because it understands how Wall Street perceives companies that only offer lending or primarily offer lending and rely so much on lending revenue alone. The company now has logged 3 consecutive quarters of profitability on the bottom line, with 17 million in GAAP net income in the latest quarter versus a loss of 40 million in the second quarter of 2023. The company's progress on profitability was one of the main reasons I upgraded SoFi stock to a buy earlier this year. And I've maintained SoFi stock as a buy all year long, and I last updated that recommendation on July 30th, reiterating that I still felt the company's stock was a buy. Now, one of the reasons I felt that way is because of the relatively fair valuation. The company's stock is trading at a forward price to earnings of 35, while it's making great progress on profitability, and the earnings per share expectations over the next several years are excellent for SoFi Technologies. The CEO goes on to say that credit performance was better than expected. If you've been following SoFi Technologies stock like I have over the last several years, you'll know that coming into this year, SoFi management was particularly cautious. They were concerned that the higher interest rates started by the Federal Reserve could bring down macroeconomic activity, which could lead to people losing their jobs, which could lead to people missing their payments on their loans. And for that reason, SoFi management wanted to decrease the amount of loans it gave out, and it was actually forecasting lending revenue this year declining by at least 5% when it started 2024. Now, since then, management has become more optimistic, and just this morning, Central Bank Chairman Jerome Powell said that it's time to start cutting interest rates. So it looks like SoFi Technologies has weathered the worst part of this rising interest rate cycle, and with interest rates declining, it's typically good news for SoFi Technologies because macroeconomic activity is unlikely to contract much further, which means that people will not miss paying off their debts, which would be a big deal for SoFi Technologies because while it is trying to diversify its business away from lending, it's still highly concentrated in lending, especially on its balance sheet. And so if people started missing their payments and defaulting on their payments in large numbers, that would be devastating to SoFi Technologies. So the company is still having stringent underwriting standards, limiting credit exposure on prudent and improving collections and services. So this goes to highlight what I was talking about earlier with management becoming cautious because of the higher interest rates, which I've been saying was a prudent move. It was a smart move. You already had so much exposure to defaults on your balance sheet, and so reducing that exposure was a smart move on SoFi Technologies' behalf this year. So in addition to tight credit lending standards, SoFi Technologies is also selling parts of its loan portfolio, so it doesn't have too much on its balance sheet. And so if defaults were to rise, it wouldn't be too exposed to the downside. And their loan sales continue to scale at attractive execution levels with an increasingly diversified set of buyers, with 1.6 billion in total sales this quarter and 4.7 billion in sales in the 3 trailing quarters. Now, something interesting that SoFi stock investors should know is even though SoFi Technologies is selling these loans to outside businesses, they are still exposed to the risk of these loans defaulting. From what I've seen in previous quarters and when SoFi Technologies has reported on the details of these loan sales, they mentioned that if there were to be defaults, SoFi still has a portion of exposure to those defaults. It seems like the deals they make with these businesses, in those deals, they put in the language that if these loans that we're selling you default beyond a certain point, we will take some responsibility for those losses. Some percentage will come from us and the rest will go from you. So while SoFi Technologies is selling these loans to get them off their books, off their balance sheet, they're still exposed to the downside risk of default, even though it's off their balance sheet, even though they sold it to another business. So I think SoFi stock investors should keep that in mind so that they don't get too comfortable in feeling like, oh, they've sold these loans and it's okay now. Even if there's mass defaults, it's not going to impact SoFi because it's off their balance sheet. That's not the case in this situation because in the arrangements, SoFi Technologies said that they're retaining some exposure to the downside of default in these loan sales, which is not ideal. But if that's what it takes to make the sale, then SoFi Technologies is giving up that perk in the deal so that it can make the sale and at least reduce most of the exposure, even if it's not reducing all of the exposure. And touching on the factor I highlighted at the top of the video with SoFi Technologies' strategy not to have brick and mortar banks and that strategy working, we got further confirmation of that in the second quarter where SoFi added 643,000 members and they now have 8.8 million members, which is up 41% year over year. So customers are voting with their choices, suggesting that they don't mind if the bank that they're with, their primary bank, doesn't have a physical presence. So much banking can be done digitally nowadays where you don't really need a physical presence. And then those banks that do have a physical presence, they're not operating them very effectively. The banks around my neighborhood, they're not operating very effectively. They're understaffed and undertrained. And so every time I walk into the bank with a question or with the service that I'm considering, I typically walk out of there disappointed. And so these physical brick and mortar branches, they're not working very well. And SoFi Technologies is capitalizing on that opening, and they are capitalizing very, very well. So I hope that highlights and illuminates a little bit on what's going on with SoFi Technologies stock and some of the reasons why I've had SoFi stock rated as a buy. And if you had any more questions, ask in the comment section below. I love to hear about company-specific questions. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.